They told you the dollar was untouchable. They told you United States Treasury bonds were the safest asset on the planet. They told you China would never dare pull the trigger. They were wrong, dead wrong. In the past 90 days, something happened that no mainstream financial network in the United States dared to put on their front page. Something so significant, so structurally dangerous to the American financial empire, that the moment most people understand what it actually means, they will never look at their savings, their retirement account, or their government the same way again. China just dumped over $500 billion worth of United States Treasury bonds. And the tremor you didn't feel? That was the foundation of the entire American financial system beginning to crack. This is not a theory. This is not a prediction. And the data is public. The numbers are in. And what they reveal is the most calculated financial strike in the history of modern geopolitics. Stay with me, because by the time this is over, you will understand exactly what just happened, why it happened right now, and what it means for every dollar sitting in your bank account. Let's start with the basics, because most people have never been taught how this system actually works. The United States Treasury bond is essentially a loan. When the government in Washington needs money, and it always needs money, it sells these bonds to investors around the world. You buy the bond, the government gets the cash, and they promise to pay you back with interest over time. Simple enough. But here is where it gets interesting. For decades, the single largest buyer of these bonds was not a pension fund, not a hedge fund, and not an American citizen. It was the People's Republic of China. At its peak, Beijing held over $1.3 trillion in United States Treasury bonds. They were essentially bankrolling the American government's spending habits. This arrangement wasn't charity. It was a calculated strategy. By buying United States debt, China kept the dollar strong and their own currency, the renminbi, artificially weak. A weak renminbi meant their exports were cheaper. Cheaper exports meant American consumers kept buying Chinese goods. American consumers buying Chinese goods meant dollars kept flowing into Beijing. Those dollars were then recycled back into more treasury bonds. It was a perfect closed loop. It was also a trap, and both sides knew it. Washington called it Chimerica. Economists wrote books about it. It was the great financial symbiosis of the 21st century. But symbiosis only works when both sides need each other equally. And that equation has now fundamentally changed. So what broke the loop? 3 things happened simultaneously, and the combination of all 3 at once is what makes this moment so historically significant. First, the United States weaponized the dollar system in a way that terrified every government on Earth. When Washington froze $300 billion of Russian central bank reserves in 2022, the message sent to Beijing was unmistakable. It wasn't just a warning to Moscow, it was a demonstration to every nation on the planet that held dollar-denominated assets. Your money is not really yours if Washington decides you are the enemy. Your reserves can be erased with a keystroke. Beijing read that message clearly. If the United States could do it to Russia, they could do it to China. And with tensions over Taiwan escalating, the strategic calculus in Beijing shifted overnight. Holding $1.3 trillion in United States Treasury bonds suddenly looked less like an investment and more like handing your adversary a loaded gun pointed at your own economy. Second, the numbers inside the United States no longer made sense from a pure investment standpoint. The national debt of the United States has now surpassed $36 trillion. Let that number sit for a moment. $36 trillion. The annual interest payments alone on that debt have now crossed $1 trillion per year. That is more than the entire United States defense budget, more than Medicare, more than Medicaid, and it is the single fastest growing line item in the entire federal budget. The bond market is not stupid. When lenders look at a borrower drowning in debt, with no credible plan to reduce spending, and a political system incapable of making the hard choices required to get the fiscal house in order, they start quietly moving toward the exit. China has been moving toward that exit for years. Now they are running. Third, and this is the piece that almost nobody is talking about, China now has somewhere else to put the money. This is the critical development that changes everything. For decades, there was no real alternative to the United States Treasury market. It was the deepest, most liquid financial market in the world. If you had trillions of dollars to park, you bought treasuries, full stop. But the BRICS alliance, Brazil, Russia, India, China, and South Africa, along with dozens of new member nations, has been quietly building a parallel financial architecture, a system that is designed specifically to function without the dollar, without the Society for Worldwide Interbank Financial Telecommunication, and without the International Monetary Fund. And at the center of that new system is a currency concept that terrifies Washington more than any military development in decades. It is called the unit, and it is backed by 40% physical gold. Think about what that means for a moment. While the United States dollar is backed by nothing but the full faith and credit of a government carrying $36 trillion in debt, this new trade settlement mechanism has a real physical anchor. Gold sitting in vaults that cannot be frozen, cannot be sanctioned, and cannot be deleted by a keystroke in Washington. When Beijing began aggressively purchasing physical gold over the past 3 years, hundreds of tons every single month, month after month, this is why. They were not speculating on gold as an investment. They were building the foundation of a new monetary order. So when China sold $500 billion in United States Treasury bonds, the question you must ask is not where did the money go? The question is what did they buy instead? The answer is gold, infrastructure, direct bilateral trade agreements denominated in local currencies, physical assets in Africa, Southeast Asia, and Latin America, hard assets that cannot be sanctioned. Hard assets that will serve as the collateral for the new financial system they are building in plain sight, while the American media focuses on stock market highs and celebrity gossip. Now here is where this gets deeply personal for you, because you might be sitting there thinking this is geopolitics. This is a Washington and Beijing problem. What does any of this have to do with my life? Here is the mechanism that connects Beijing's decision to your kitchen table. When China sells United States Treasury bonds, those bonds have to be absorbed by someone else in the market. If there are more sellers than buyers, the price of the bonds drops. When bond prices drop, interest rates rise. This is basic bond mathematics. And when interest rates rise in the United States, everything priced off those rates rises with them. Your mortgage rate, your car loan, your credit card interest, the cost for every business to borrow money to expand and hire, all of it goes up. But the more dangerous scenario is not a gradual rise in interest rates. The more dangerous scenario is a sudden loss of confidence. A moment when the global bond market looks at the trajectory of American debt, looks at a political system that cannot agree on a budget, looks at the Federal Reserve trapped between fighting inflation and preventing a debt crisis, and decides in unison that the risk premium on United States debt needs to reprice dramatically and immediately. That is what economists quietly call a bond market accident, and the conditions for one have never been more precisely in place than they are right now. Let's talk about the math that no politician will say out loud. Yet the United States currently runs a deficit of roughly $2 trillion per year. That means every single year, the government spends $2 trillion more than it takes in through taxes. To cover that gap, it sells more Treasury bonds. But here is the trap. As interest rates rise, the cost of servicing the existing debt rises, which means the deficit gets larger, which means more bonds must be sold, which means more downward pressure on bond prices, which means interest rates rise further. This is the debt spiral, and there is no clean, painless exit from it. The Federal Reserve has only two real options. Option one, let interest rates rise to whatever level the market demands, which means accepting a severe recession, a collapse in asset prices, and a brutal reckoning with decades of financial excess. Option two, print money to buy the bonds that foreign nations are no longer willing to purchase. This is called monetization of the debt, and every single time in recorded history that a government has gone down this path, the result has been the same. The purchasing power of the currency collapses. Inflation does not just run hot, it gallops. The savings of ordinary citizens, people who did everything right, who worked hard, who saved, who played by the rules, are quietly, systematically destroyed. This is not a theoretical future scenario. This is the road the United States is currently on. And China's decision to dump $500 billion in Treasury bonds is not the cause of this road. It is the acceleration. It is the moment when the road that was already headed toward the cliff begins moving faster. Here is what makes this particular moment historically unique. We have seen reserve currency transitions before. The British pound was the world's reserve currency before the dollar. The Spanish silver dollar before that. The Dutch guilder before that. But every single prior reserve currency transition happened over decades, even centuries. The world had time to adjust. Institutions had time to adapt. The transition was painful, but it was gradual. What is happening now is different in one critical way. It is happening in the age of digital finance, where capital moves at the speed of light, where algorithms can process and react to information in milliseconds, where a loss of confidence that once would have unfolded over years can now unfold over days. The speed of a potential dollar crisis, if one comes, will be unlike anything in financial history. So what does the smart money actually do in this environment? What do the institutions, the sovereign wealth funds, the central banks, the billionaires who understand what is actually happening, what are they actually buying? They are buying gold, not paper gold, not gold exchange-traded funds, physical gold, the kind that sits in a vault and cannot be deleted. Central banks around the world bought more gold in 2022 and 2023 than in any 2-year period in over 50 years. That is not a coincidence. That is a signal. When the entities that create paper money start hoarding real money with unprecedented urgency, they are telling you something. They are telling you that they do not trust the paper they are printing. They are also buying productive land, hard agricultural assets that produce real food, regardless of what happens to the currency. Bill Gates is now the largest private farmland owner in the United States. It is because in a world where paper currencies are being debased, the ability to grow food is the ultimate form of real wealth. They are moving into energy infrastructure, uranium, copper, the physical materials that the artificial intelligence revolution cannot function without. You can sanction a software company. You can freeze a digital asset, but you cannot sanction physics. You cannot freeze a copper mine. And perhaps most controversially, they are accumulating Bitcoin, not because of speculative fever, not because of technology enthusiasm, but because Bitcoin has one property that no government bond has ever had in the history of human civilization. Its supply is absolutely mathematically, permanently fixed at 21 million units. In a world where every government with a printing press is using it as aggressively as politically possible, an asset with a hard ceiling on its supply is not a speculative instrument. It is a lifeboat. The barbell strategy, the framework built around holding extreme safety on one side and asymmetric upside on the other, while eliminating everything in the middle, has never been more relevant than it is right now. The middle is being destroyed. The moderate bond portfolio, the savings account, the pension fund stuffed with government debt. These are the positions that lose everything in a reserve currency transition. The extremes are where survival and opportunity both live. The gold in the vault, the land that grows food, the energy that cannot be shut off, the fixed supply digital asset that no central bank can dilute. And on the other extreme, equity ownership in the companies, building the infrastructure of whatever comes next. Because something always comes next. Even in the most dramatic monetary transitions in history, civilization continued. New systems emerged. And those who understood what was happening, who positioned themselves correctly, who held the right assets going into the chaos, came out on the other side with their wealth not just preserved, but multiplied. China did not dump $500 billion in United States Treasury bonds because they made a reckless mistake. They did it because they ran the numbers. They looked at the trajectory of American debt. They looked at the weaponization of the dollar system. And they looked at the alternative financial architecture they have spent 15 years building. And they decided the time had come to execute. The real question is not what China does next. The real question is what you do next. Because the window for making these decisions, while markets are still orderly, while assets are still available, while you still have the freedom and the financial latitude to reposition, that window does not stay open forever. History does not give you a formal announcement when the moment of maximum danger has arrived. It just arrives. And the people caught unprepared are not the ones who lacked access to information. They are the ones who had access to information and chose not to act on it. You now have the information. The clock is running. The $500 billion sell-off you just witnessed is not the end of this story. It is the opening chapter of the most consequential financial restructuring in modern history. The old rules are breaking down. The institutions that were supposed to protect your wealth are the same ones printing it into oblivion. What comes next will separate those who understood the shift from those who never saw it coming. The game has changed. The only question left is whether you change with it. If this opened your eyes to what is actually happening inside the global financial system, do not let the algorithm bury it. Hit that like button right now so this information reaches the people who need it most. Subscribe to this channel and turn on notifications, because the next video will go even deeper into the mechanisms they do not want you to understand. Your future self will thank you for staying informed when it mattered most. The truth is out here. Do not miss it.